Hello and welcome to Scrolling with Ceazor. Today is July 27th, 2026. Okay, so taking a look at the charts, we've got lots of red across the board for most crypto. Well, the only crypto that I really watch here, lots of redness. So ETH is down 1.25, BTC down 1.25. So ETH BTC is pretty flat. Sonic's down 4%. Hype is down 3.5%, and so forth. So I've added some stocks to my charts here to show you because I've always held some stocks inside my TradFi portfolios. However, since tokenized stocks went on chain, I've decided to add a little bit of stock exposure to my crypto wallets and stuff like that. So my main Docs wallet is showing these stocks as liquidity pools. So if we go through them and you see that I've added liquidity to these stocks within these ranges, and so I'm gonna farm some trading fees, and if I'll check these every day, and if they go out the top of these liquidity positions, then we will, I'll close the position as in profit. So it's like, buying down here, I'll buy a little bit more down here if it goes down more, right? But buying down here where I opened it, and if it goes at the top, then I've sold all out, and all during this crabby time, I make some trading fees. Now the APR is not insane on these, and unfortunately, I have to do them versus like stable coins, so that kind of sucks a little bit. But I'm using Ramses. Okay, Ramses has dropped onto Robinhood chain as a DLAM. So DLAM is a little bit more complicated than CLPing. If you know what it is, then you can kind of just listen to me and ignore me for a little bit. But it allows you to put your tokens in multiple ranges. I'll do a quick video and kind of show you how to provide liquidity to the DLAM type liquidity positioning, and you can kind of decide whether or not you want to do this or not. Now, the key thing here is that like 95% of the fees are going to you as a liquidity provider, and 5% are going to the protocol to help buy back and burn RAM. So some people might think about it like, oh, I'm losing 5% of my fees. So why wouldn't I do it on Uniswap or something else? Well, Uniswap is CLP, and you have to put it in 50-50, or maybe not 50-50, but the range, the amount of money you put below and above the price is very strict about being the ratio of the pool that you've created. However, with DLMA, you can put like $10 across a wide bottom and thousands of dollars across a wide top, and you don't have to balance the ratio very tightly to make sure you get, and you can put all your money in there. So I'll show you later on that. But anyhow, and I'm pretty sure Uniswap is taking a cut of the fees as well. I haven't looked into it deeply, but I'm pretty sure they are. Anyways, so if you don't like this 5%, what you could do is you could try to hold some RAM. So you could hold RAM to hedge this 5%, or you could use RAM as XRAM, and then put that XRAM into the auto vault and get your dividends back that way in the fees. But like these those fees that you'd have to do that on Hyperliquid, and you would only be getting the fees that are generated on Hyperliquid, not these 5%. But anyways, I still think it's worth trying. I like it. The user experience is really good. I'll show you a video later sometime. I'll just do a quick little UI walkthrough of how to take advantage of this possibility. Now, like I said, this is a lower risk. This is a lower risk position. Of course, you are speculating on the price of these these stocks. So don't LP at the top. Don't buy a whole bunch at the top and LP above unless you think it's going to continue to pump up. LP. You're making a speculated price bet on this. So take that into account. Think about that when you are doing this. Let's move on to the next bit of news. So here we have Lido. Lido has an upgrade to their contracts. Basically, you can go through all of this and find out everything that's here. But the key factor here is that now they're supporting these 0x02 validator supports. So basically what that means is a validator doesn't need to only stake 32 ETH. Like, that's not a maximum. I can't remember the upside, the upper limit of it. I think it's like 2,000 something, or I can't remember the number, but like well more. So as a result of that, they were able to consolidate a lot of their validators into a single validator, and they're able to reduce the attestation messages by approximately 30% every epoch. Now, I'm not sure if that means more money for them, like more profit. I should probably let's check Grok, what Grok has to say. Does the reduction of attestation messages increase revenue or reduce cost? And let's see what like Grok has to say. Like, this is why I'm really loving this Grok like tag thing here, asking them specific questions. So it is taking some time. So that's the main upgrade that while it's thinking, I'll talk about. So this is the main upgrade here. There's a little bit more about their DVM messages, which this here new mode identified DVT clusters. DVT clusters are where like several validators borrow the ETH from Lido, and they kind of run a single validator together. So it's like, yeah, that's the best way to explain it. So anyways, you can go through all of these upgrades, and the key thing here, if you are a staker, like a holder, then you don't have there's no requirement for you to do anything. It's just knowledge that they are improving. So let's see what it says. It primarily reduces costs and operational overhead rather than increasing revenue. So okay. So decreasing, I guess, they're running less hardware, which is obviously good. But I wanted to know specifically the messages. I'm not going to read through all this on this podcast, but anyhow, you can pause this and read this if you want. Okay, let's move on. So this is pretty crazy. So AI companies are buying up like rare books, ripping out the spines, scanning them, and putting them into their databases and then basically shredding the pages. Now, the shredding of the pages sucks big time. Now, I'm all for, AI just kind of like making digital copies of all these books, especially these older, rare ones. I'm okay with that. That's fine, right? Of course it is. But why are they shredding the original copies? They should, not shred the original copies. Like, I get it, they have to break the spines in order to scan them, but then they can just put them in like a Ziploc bag and put them somewhere. You know what I mean? Like, just... maybe they don't want to pay to like re-spine them and stuff like that, but they can definitely just like vacuum seal the papers in some plastic and just stick them in a box somewhere, catalog them, of course. But yeah, like I don't understand. It's too like Terminator for me. I think it's pretty bad that they're doing it that way. But anyways, I don't know. So that's happening. Moving on. So Millie likes to do these long thought posts, and I like it, kind of. So he's like, governance failed in the past because we lied. Uniswap lied, Curve lied, Aave lied, Maker lied. They're all liars. They told us anyone could participate, except they never mentioned that there's a massive prerequisite. Like, you need to understand things. You maybe even have to read code. But now that's not the case. Now you can use Grok or ChatGPT or Anthropic or all of these things to just basically help you. Just tell you what things make you understand it more easy, so you can vote better, and that's enough. And you can even like have an AI agent vote on behalf of you by telling it your ethos and your values and your mentality, and it can just like read the proposals and vote for you. So yeah, like, it's pretty cool. Anyway, so he's kind of talking about that, This reminds me of the post that I did today, which I should probably share with you because it is kind of that. So I'm like, when to take profit on your ETH when we have actual on-chain governance for entire countries, when every adjustment to a government is posted into their GIP pipeline. When new agencies are only open via GIPs, when useless agencies are closed from a lack of GIP renewal funding, when every citizen has the right to delegate their votes to individuals or AI agents that wish to vote for others, when delegates are paid on behalf of the delegators they hold, when at any time an individual can override their delegated vote on a single GIP. This is what mass adoption looks like. I think the government is very antiquated. The system of giving, absolute power to a prime minister or president is too antiquated. It's not worth it anymore. Like the president and the prime ministers of countries, they make decisions because they're human that are completely biased and selfish. And it just shouldn't be like that anymore. The government has extremely shifted away from for the people, by the people, to something more like, the people are now their sheep, and those people better do what the government says. Now, I understand there's all of like war and top secret stuff and all this kind of espionage and stuff like that maybe the average person cannot know because, they will leak that information to the enemy, right? So there is that, of course, which needs to be considered. But like, I'm not saying, the CIA needs to like explain all of their operations in order to get funding, but the CIA should have some sort of like, a assessment or, obligation. Like, what have they produced in the past? Continue to give us more money so we can continue to do that, right? This kind of thing, I think, is important. Moving on. So the Daily Degen, if you're not following these guys, follow this thing. It's fantastic by Recordamides. So here he is retweeting another awesome thing, which is a DeFi Dave and Nomadic's podcast called The Edge. And they have, who's this guy? Paul Farambot from Morpho on, and he's talking about, the future is bright. You better wear some sunglasses. Like, it's been pretty bearish and bullish, like especially if you look at like a long-term chart of ETH. If we go to here and look at ETH long-term, it looks pretty rough, right? It's like only down, but things are starting to look up. We were at 5K for a while, around 5K, and now we're at like 2K. But that's just price action. If you look at like TVL numbers and adoption, things are very different, and I think things are looking up and brighter. Like maybe, you only care about price action because that's what makes you rich, right? But in regards to like the tech and adoption and like all this kind of stuff, I think things are looking better in that manner. So yeah, so you can watch this. I'd suggest you watch this guy's podcasts. They have good guests. This is not pure paid shilling in the sense of like, just they won't like just like have anybody on that's just willing to pay them to shill the product. So yeah, I think they care about DeFi and adoption and just utility and use case and everything like that. Moving on. So this is pretty cool news. I'm not going to read all of this, but basically, Corn goes into why Bold is so it has these juicy spikes in yield, and right now there's some pretty good yield. The interest rates on Bold are increasing. People are willing to pay more and more to borrow Bold, and Bold is increasing in TVL as well as APRs, and right now it's like 10% on your 12% estimated. It's good stuff. Okay, now. What is really exciting is why Bold is coming soon to FlexMeow. I've talked a lot about FlexMeow. I really like it. I think it's a fantastic protocol. It's a fantastic way to loop things. You loop it up, and you'll be able to loop this 10% Bold, and everybody will just make lots more money. So anyway, so that's happening. I'm really excited about that. You can check it out. I will be talking about this when that goes live. But even if you don't want to do the FlexMeow looping, minting Bold or just buying Bold from the market, check price, check your price impact. Like Bold might be above $1 when you want to do this. So, make sure you're not spending $1.09 for $1, right? Don't do that, right? So check the Bold price if you want to just buy some Bold and then stick it in here. If you do hold Bold and Bold loses its peg, then you can always redeem it for $1 for ETH or WST ETH or Rocket Pool ETH. You can redeem other people's. Okay, so that is there. There's even a front end to do that. Moving on. So small thing is talking about this thing here. So whenever an exchange fails, it marks the bottom. So BitMEX just closed. FTX was a different kind of closing. BitGrail, Mt. Gox, all these like bottoms hit, and these things kind of close down. I think it's pretty good because like yeah, it is bearish in the sense that like obviously why they're closing is because they're not getting volume, right? People are not using it. People are not paying fees. They're not generating revenue, and that shows that like adoption is down, right? At least in BitMEX, right? But I think if it kind of like we have too many centralized exchanges, we don't need them. I don't advocate anyone to trade on a centralized exchange. So yeah, I think it's healthy. It's like killing off like the parasites in some ways. So yeah, so I'm okay with that. I'm happy with that. And yeah, so that's happening. So here is me trying to create a DML pool. Like I said, I'll do a video on this in the future, but I just thought I would mention that you can create pools here. So that's it for today. I hope this has been interesting and useful. Thank you so much for listening, and goodbye.